right? It's not as if people are really pricing in long-term economic outlooks right now.
All right, Mike Santoli, thank you. China, meanwhile, playing hardball with the NBA. Its state-run television network suspending broadcast of the league's preseason games after a tweet from the Houston Rockets GM, Daryl Morey. Some of China's top retailers, Alibaba and JD.com, also reportedly removing Houston Rockets items from their websites. NBA Commissioner Adam Silver reacting to the news ahead of his visit to China tomorrow.
We are not apologizing for Daryl exercising his freedom of expression. I regret, again, having communicated directly with many friends in China that so many people are upset, including millions and millions of our fans. It's my hope that for our Chinese fans and our partners in China, they will see those remarks in the context of now a 3-decade, if not longer, relationship.
Joining us now, co-owner of the NBA Sacramento Kings, Andy Miller, also the owner of the esports team, the San Francisco Shock, and founder and CEO of NRG Esports. Andy, good morning.
Good morning.
So can the NBA thread this needle, support free speech and stay popular in China?
I'm sure Adam Silver can figure it out. You know, it's a pretty complicated political and business issue. The NBA has a long-standing relationship with China. China loves basketball. They love the NBA. So full faith in Adam, who's done an amazing job in his tenure as commissioner to work through it.
So you got an esports team as well. What would you do in this situation if a player or somebody involved with that team said something about Hong Kong that angered some people in China? Would that be a business deal breaker for you in China? Would you try to regulate their speech in some way or put out a different message?
Well, I mean, that's a tough one. We're all for freedom of speech, especially video games are a very different animal than traditional sports in that it's pretty boundaryless. With new leagues like the Overwatch League, which we are in, there is a sort of local component, and then in other games, it's more of an international. Everybody's a fan of their favorite teams and players. So, that's just that's a real political issue, and we definitely back freedom of speech.
Now, let's talk about the Overwatch League Grand Finals. The big win for your team. This is one area that makes me feel old because I know esports is big. I can feel it. We talk about it, but I don't feel like I'm really participating. Is it going to break through into the mainstream at some point? What's it going to take?
No doubt. It's getting there really fast. So we saw 2018, especially 2019, a big year for video games. Lots of video game costumes there knocking on your Halloween door. So I think a lot of parents realize that this is a pretty much a mainstream activity at this point. 1 in 3 people on the planet game every month now. And if we just look at what happened last weekend in Philadelphia with the Overwatch League Grand Finals, sold out the Wells Fargo Center, 13,000 people watching live in person. It was crazy. Average age was not 13 years old. It was probably 25, 30 years old. And there were millions and millions of people watching around the world. So I think we're getting there very quickly. People say, is this the sport of the future? It's pretty much, the sport of now. And if you go 4, 5, 10 years into the future, this is what people have been doing for the last decade. This is their sport. This is how they hang out and spend their time. This is their passion. So they're going to just continue to do it as they get older.
Andy, I want to go back to China for a minute, whether it's the big business of basketball or whether it's the big potential business of esports. From the Kings' perspective or from the NRG perspective, what's on the line in terms of breaking into China and that marketplace?
Well, it's a huge market for video games, as we know. Massive viewership for Overwatch League. All of Asia loves games, loves esports, loves to participate. So it's really important for the growth of esports and gaming as a whole. A lot of games, a lot of traditions started in Korea and China and Asia as sort of the home of video games. So I think the two are very intertwined.
What's the next technological level for esports? I mean, we kind of understand how processing power, especially GPUs, has become part of the overall gaming experience. But how much is 5G going to matter when it comes to people being able to view stuff like esports on the go? How much are mobile platforms going to matter in the future? What's going to really catalyze the business for you?
Well, I think we've seen the emergence of the streaming platforms, and competition now for Twitch across Microsoft and Facebook and other platforms. Of course, YouTube is huge now. So there's the accessibility of watching esports, of playing games is everywhere now. So it really fits into sort of that internet lifestyle of which gaming and gaming culture really is the core of it.
And what about augmented reality? The company that you used to work at, Apple, has been trying to push on that for quite a while. I'd say they haven't been successful, frankly. Very limited success. Does that start to come into play at some point?
I think so. We'll just see video games develop and the way people want to spend their time, their entertainment, their entertainment dollars, their passions. We'll see AR, VR. I'm sure we'll be able to, look down and see avatars and have a whole different viewing experience. And because the game is actually digital that we're watching as spectators, I think that the viewing experience will lead the way.
All right. Thank you. Andy Miller.
Thank you.
Co-owner in the NBA and in esports.
When we come back, trade talk optimism dwindling here as we're close to session lows in the markets. Senator Marco Rubio will join us to discuss an important week in trade, censorship in China, and a lot more when Squawk Alley comes back.
Hi, my name is Sam Davis.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Will the retirement you get be the retirement you want? Check your state pension and see how you can build on it with a workplace or other pension. Get to know your pension at yourpension.gov.uk.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offers subject to conditions and availability.
You're 169 in the queue.
I proposed on the 169. She got for the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
All right, I'm Brian Sullivan. Here's what's coming up on the halftime report. Stocks dropping as optimism fades around hope for any U.S.-China trade talks. But Fed Chair Powell set to speak later this afternoon. Will that turn stocks and your money around? Speaking of stocks, Credit Suisse, naming names. They've got 7 contrarian stock ideas for you right now. And new analyst, new opinion. And it's one of Microsoft investors should all love. It's a bullish call. And we will have it, all that and much more on the halftime report coming up in just a few minutes. But Carl, I will send it back to you now.
All
All right, Solly, see you in a bit. Trade talks, obviously, you know by now, set to resume in Washington this week. The Trump White House widening its trade blacklist. 28 entities, including China's top AI startups, added to that list, which does restrict organizations from doing business with American firms. It's worth noting that several of those on the list trade on the MSCI. Speaking of which, joining us this morning on the phone, Florida Republican Senator Marco Rubio. Senator, good to have you with us. Good morning.
Good morning.
This entity list is the story of the day. Now China's urging the U.S. to remove those entities from the blacklist. Why did the administration do this right when talks were going to begin?
Because I don't think these matters have anything to do with trade. These are companies that are responsible for two things. First, they pose a national security threat to the United States. They're part of a vast surveillance state capability that the Chinese are building through commercial entities. And they're selling these products all over the world, and they use it to gather data, which is what's going to be the key to the 21st century in multiple industries. And so their presence in the United States is problematic from a national security standpoint. The other is the role they've played in setting up this large-scale systematic system of human rights abuses against Uyghurs and other religious ethnic minorities in Xinjiang. So this is not a trade matter. This is a national security and human rights matter, and that's why these companies find themselves on that list.
So how does it impact the trade matter, which is something obviously a lot of our viewers are thinking about?
Well, it might impact the trade matter, but that can't really be a factor for us. In essence, we cannot put ourselves in a position of saying we're going to allow you to compromise our national security and we're going to allow you to go around the world and conduct these egregious human rights violations because it's good for getting a trade deal done on the broader matters. And we just have to be able to separate the two. I mean, the trade deals are not very good if they require you to give in or jeopardize your national security or your values as a nation.
Yeah, Senator Rubio, I mean, there's a lot on the line here, I think, longer term, if you pay attention to defense and weapons hardware. I'm wondering what you think of the parade, the military parade we saw in China for the 70th anniversary last week. A lot of attention given to the missiles, but we saw a number of autonomous systems, including a stealth combat drone that were displayed. And so when you're talking about technology and you're talking about AI capabilities, it goes much broader beyond commercial or consumer uses, right?
Well, that's right. But beyond it, I would say that you look at some of those advances, to their credit, are indigenously produced. I mean, they have increased their capability of making some of these things on their own and made huge advances on their own. They also steal these things. I mean, we see case after case in which they have gotten their hands on sensitive U.S. technology, either by bribing someone or by hacking into something or by planting researchers at our institutions or by capturing a downed aircraft and reverse engineering, or in many cases because of companies who are doing business in China and have to joint venture with one of their companies and helps them reverse engineer processes there. So they have made advances in military weaponry and in military hardware and capabilities that also pose a national security threat to the United States. And I think the parade is perhaps the most visible example of it. But for those of us who have followed this has been evident for some time.
Senator, you've also positioned the listing of foreign stocks in the U.S., Chinese stocks, but other foreign stocks, as a national security issue. If they're not giving the same amount of information, following the same standards as U.S. stocks, I'm wondering what you think is a realistic timeline for saying that other companies outside the U.S. need to follow those standards and giving them time to start following those standards?
Well, first of all, the Chinese have said they will not follow those standards. In fact, they prohibit it. And the second is almost every other company in the world, other than those who are headquartered or come from China, follow those standards. Look, U.S. capital markets... So
this really is about China, you would say?
Well, because they're the ones that behave this way. Our capital markets are the deepest, are the most liquid in the world, but we have high standards for disclosure and transparency in order to protect investors from fraud. And it's very simple. If Chinese companies want access to U.S. capital markets, they should follow our laws the way American companies have to follow their laws over there. That's why the financial side of the U.S.-China relationship in these terms has not gotten enough focus. They have reaped enormous economic rewards while exploiting our openness and our freedom as of the U.S. Global order, led order, and it can no longer allow this authoritarian government to reap the rewards of American and international capital markets while avoiding financial disclosures and basic transparency that place our investors and our pensioners at risk.
you've been writing about this for a long time now, and I wonder whether it's today the report about limiting the number of China stocks in government funds, delisting actual Chinese companies, restricting the IPOs. Which of those things is most likely, do you think?
Well, that's a good question. I don't know which one's the most likely. I hope they all begin to happen. I think the entity list is a good step. I think looking at how the Federal Retirement Thrift Investment Board makes decisions is important. That's something that could happen fairly quickly. But I think this matter of disclosure and transparency is really a matter of financial security. We've got the investors who need to be protected from fraud, who have no insight into these companies and are taking tremendous risk because these companies don't follow the same standards that all these other publicly traded companies do, including other multinational and global companies who are being sold in our market. So I hope they all happen, but I think obviously the entity list was the one that I thought they could move off quickest. And
finally, we've spent the last couple minutes talking about China as a national security threat. You were asked whether the president really meant it when he said they should help him investigate the Bidens. You said he was just trying to bait the press. Do you stand by that? And if you don't, why should we consider China such a threat and also accept their help when regarding a political opponent?
Well, a couple things. Number one, I don't think what he said was right. I don't agree with it, but I don't think it's not there's a difference between a serious proposal and a comment made out in the lawn there in the White House. I'm not telling you it's an appropriate comment. I'm just saying that's not going to happen. That's not actually something that's going to happen. These things are actually happening.
How do you know, Senator?
If it changes, and if it changes, then it'll be all over. Like if tomorrow you tell me that the administration is actually working on a plan for the Chinese to get their hands on Joe Biden or anybody for that matter, I'd be all over that and against it and outraged. But that's different from an offhand comment made as part of a pattern that's been going on now for 4 years. I've been watching this now up close for 3.5, 4 years, where he says something, everybody gets their hair on fire, and then we spend 48 to 72 hours focused on that. That's not a real proposal. It's an offhand comment, an inappropriate one, but not a real proposal or a real initiative that's undertaken. These other things are actually happening.
Can you sympathize with pool reporters who have to now decide whether this is a, quote, offhand comment or a policy statement by the President of the United States?
The two biggest. Absolutely, because I think we live in an environment today that's driven, frankly, news today is, and I'm not criticizing the news, it's what it is. It's a fact. It's driven by generating clicks and viewers, and what generates clicks and viewers is controversy and outrage. There's no doubt. I sympathize with having to chase this tail every single day. Every single day, something gets introduced into the narrative, sometimes as early as 6:30 or 7 a.m. in a tweet, and then everybody spends all day running around with their hair on fire, and so we start all over again tomorrow. Meanwhile, we've got a bunch of things that are actually going on in the world that deserve attention as well. And I think for someone in my position, you have to make a decision. Am I going to become a daily participant in the outrage of the day, or when are we going to have time to sort of, on my end of it anyways, focus on what's actually happening? Like the thing in Syria is actually happening. These threats from China is actually happening. These things deserve a lot of attention and sometimes get lost in the daily noise.
Well, that's obviously why we asked you to come on, and we do appreciate you talking about something that really does matter, especially to a lot of our viewers. Senator, come back soon.
All right, thank you.
Senator Marco Rubio.
Squawk Alley's back after this. Don't go away.
My broker says don't sweat it. Trust me.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Here at LNER, we love giving you more value. And we all love more, don't we? More sleep, more sun, more me time. So we've added our new Azuma trains with more seats and more great value fares. In fact, there are 3,773 more £29 single tickets every week on our Azuma trains between London and Leeds. Brilliant. Book direct at lner.co.uk, launching alongside existing LNER trains.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throwing, he's got it in stiff arm, end zone, touchdown!
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Let's get over to Rick Santelli for a quick Santelli exchange. Rick.
Yes, Carl, a quick one. You know, we saw the September PPI data today, and 0.3 on headline, well, it takes us all the way back to September 2015 to find a lower run on core, also at minus 0.3, February of 2015. Let's quickly go to the board. Here's 10 and 30-year rates since July 1st. The reason? 5 degrees of separation. We made our historic bottom on 827 for 30s at 195. All-time low historic yield closed. Then 5 sessions later on the 3rd, we made the cycle low at 146 for 10s. We all know that 10s, their double bottom from 2012 and 2016 is right around 136. The reason I'm doing all this, we're basically 6 basis points away, 6 basis points away, and then once we get there, we'll be 10 basis points away. Never have I seen so many important technical levels all converging right around the same price. You want to make sure you watch both of these on a closing basis because that will unleash even more buying. Carl, John, Morgan, back to you.
All right, Rick, thank you very much. And you can bet we're going to be on the lookout for any tweets in the second half of today's session. Don't forget, Powell speaks in 2.5 hours at NABE. The topic is about data dependence, but who knows where he could take it.
Yeah.
Indeed. Meanwhile, growth stocks still having a rough time this morning, though. Hey, the major indices are all lower.
Yeah, lower by 1%. Every sector in the S&P is in the red, so sell-off continues here.
All right, we'll keep an eye on it. Let's get to Sully.
All right, Carl, Morgan, John, thank you very much. Hello, everybody. I am Brian Sullivan in for Scott again today. A new round of trade talks and a new round of headlines for investors to navigate. But it's not just trade. The Fed also set to be a major factor in today's trading. It is 12 noon Eastern, and this is the Halftime Report.
The bears are out on Wall Street. Will Fed Chair Powell's speech later today help calm nerves? Microsoft on a tear this year, outperforming the FANGs. Why the stock may be going a lot higher for a lot longer from here. It's our call of the day. A major setback for Boeing's plan to get the 737 MAX back in the air. The traders take their position on the stock. The investment committee is ready to go. Halftime report starts right now.
Hi, everybody. It's good to have you with us on this Tuesday and good to be here. Your investment committee, Stephanie Link, John and Pete Najarian, guys who know where the Caesar salad is from, and your special guest today, Carrie Firestone, CEO of Aureus Asset Management, and Rob Sechan of UBS Private Wealth Management and one of Forbes' top 100 financial advisors in the county. I'm kidding. In the in the country. All right, there is the...
Wow, he's walking off right now.
It's going to be a great show. I'm done. All right, there's your setup, everybody. Stocks, as you can see, they are sliding. Dow's down 300 points right now, off more than 1%. Concerned about trade talks. The S&P, as you just heard Rick talk about, breaking some key support levels, struggling to stay above 2,900 on the S&P. We're at 2,902, and you can see small caps. They're getting hit more than the others, down 1.5% today. But Rob, I will start with you, my friend. Here's the question.
I'm one of the tops in the county.
It is a very rich county.
In this county, there's thousands, by the way. So
it's one of the top counties.
Here's my question. I mean it for real, though, which is this. At what point does the trade fight simply become trade? And what I mean by that is this has been going on for 2 years. We keep waiting for it to end. What if it doesn't? At what point do we start to think about the markets and structuring our portfolios like maybe this is just the way trade is going to be until we're old? Maybe, or not.
Until we're old?
Yeah. Older.
Right. Well, I will tell you that we de-risked a week or two ago because we think trade is a risk to stay, at least in the short run, because there's not really the political motivation to advance it, at least to where it needs to be advanced to in the short run. In the intermediate term, we do think there is that political motivation that exists, and you should get a deal ultimately. That's what's going to happen. I think that the one thing that the market's struggling with, and it is all about trade right now, but there's also this pervasive fear of, are we going to enter into a recession? And I think those fears are overblown. The consumer is just too healthy right now. Housing's healthy. It's not likely that we're going to have a recession in that type of environment. In addition, on the one hand, when you think about what are the risks to the upside, even though we're slightly underweight equities right now, it's that in this growth and inflation paradigm, what is the right multiple to pay for stocks? Stocks are at 16.8, 17 times right now. But when you have solid growth, not decelerating, but solid, in low inflation, you could get a multiple re-ration higher if you see some of these issues fade to the background, and we think they will next year. So in the short run, I say we're slightly underweight risk, mindful of the headlines, but still cognizant of the fact that we're unlikely to head into a recession next year.
Well, Kerry, I think you got my point. I mean, I saw you nodding. The definition of insanity, doing the same thing over and over again and hoping for a different outcome each time.
Yeah.
And we've been waiting for this trade deal for 2 years.
Right.
At some point, you just have to accept this is not a trade fight.
Right.
This is just trade. This is the way it's going to be.
Well, you have to stop thinking about it. And in fact, the market has been waiting for the deal. The deal isn't happening. So we're starting to have earnings. The market's today very worried about what those earnings will look like. And they were expected to be down a couple of percent. They might be down more. Guidance will be weak. But here's the silver lining about the market. We're trading back and forth across this 2,900 line on the S&P. When you get to 2,800, if you go down a few more percent, people start to say, hey, wait a minute, here we are at 15.5 times earnings. Even if you take those earnings estimates for 2020 down 5% from where they would have been otherwise, and it's a cheap market. And then people buy because what are you getting? 1.5% for 10 years? You can take a bet and try the market because you'll get the same yield or higher, and you get an option.
So valuation may provide a floor. But Stephanie, what if tariffs go up again? And they could on October 15th. Another 5%.
Not good. It's impossible to deal with this trade and to trade around or invest around the trade issues. It's impossible. I also think, though, that the economic data, we need a couple of wins. We had a disappointing PPI today. NFIB still at 101.8. The average is 98, but down substantially from its highs. The ISM's from a couple weeks ago. Yeah, we had a good employment number, bad wage number. So, I mean, I think we just need some wins here economically for us to kind of get our footing. And then we will have earnings. And I think earnings, for the most part, will be a little bit better than feared. But from now, what I'm doing, I'm just trying to pick stocks that are not impacted by trade. So
like who?
Like VF Corp. Great brands, great free cash flow.
North Face, Vans.
Vans is hot.
Yeah, Vans red hot.
And free cash flow, $8 billion over the next 3 to 5 years that they're going to generate to plow back into.
And maybe a slight tariff on the shoes, but not enough to dissuade that kid from being like, Mom, I want the sneaks.
Right.
You know, and they're 55, not 53.
Right. So that Baxter I'm buying, great turnaround story, great management team. A little expensive, but I like defensive within healthcare because you don't have the political risk. Apollo I have been buying. DR Horton I have been buying. So I'm just trying to find stuff that I feel good about. And when it does fall on days like today, that's what I'm doing.
Yeah, I mean, I guess, John, when you look at the situation, you talk about, we just blacklisted 28 companies in China. Hike Vision, Smart Sense, a few others. I mean, we're not any closer, it doesn't appear, to a deal. What if this drags on for a year, for 2 years? That's kind of my point. How do we, if you keep waiting for this big moment to happen and it never comes, right? You've got to be prepared in any event, in any market structure.
True, and this one wasn't just the tweet alone. It was also, you know, they're pushing back pretty hard on a Muslim minority population in China, and there's also the issues about spying, like the Ambarella hit today that it's taking, Brian.
On the Hike Vision news, because that's a major customer.
Exactly, and that stock immediately fell 8%, then 10%, then 15%. It's got a little bit of a bounce from that, but it's at a pretty critical level, by the way, also, Ambarella. Right here around the 49 number for that stock is a fairly critical support level. If it breaks through there, I think it goes significantly lower. I don't know that it does. It seems to want to find that bottom here, but this is a big drop out of that.
And there is a little bit of a narrative, Pete, going around that you want to find companies that maybe where the puck is going, not where it's at. And what I mean by that is, if we're not using some of these Chinese technologies, I think there was a report last night that some people are pushing the U.S. to support Ericsson and Nokia. Remember those names?
Sure.
Yep. Try to basically, I don't want to say rebuild because that's insulting, but you make sure they're capable of adding the business. Do you want to take a chance or even bet on companies that may win because their Chinese counterparts are getting slammed?
I'm not doing that. I'm literally just trying to navigate through all these volatility that we see each and every day. I mean, the Burl Ives trade is alive and well once again, which is gold and silver, right? I mean, and it's been a great protector. It's been the moves that you get out of there in terms of a beta move oftentimes can absolutely be a cover for your portfolios. And in the meantime, to Steph's point, I think there are specific names out there, but even with China, even with trade. Now, let's not forget for just a moment, we've had this trade war going on, as you mentioned, for how many years? 2, I believe? About 2 years.
And it's only ramped up. It has never gone down.
And on the ramp
Everything
up,
has been an escalation. Nothing has been a de-escalation.
Okay, and on the ramp up, where are we in terms of the S&P? Where are we in terms of the Dow? I mean, we've
had a good year, but we're flat with a year ago.
Sure, I get that. But I mean, the reality is we are still here and we're kind of treading water and everybody's moving around. We've got this rotation, which we bring up all the time. And the rotations are happening faster than they ever did before. I mean, they're going from one to another to another to another. And that actually, to me, has given you a little bit of a healthy feel to the markets. The fact that you're getting out of some of these names that maybe are a little overpriced or stretched and getting into some of the other names.
I don't know if anybody else has done this, but I'm going to claim it if they haven't. I'm going to coin a new acronym. Forget FANG. It's now the BUG. Sure. Bonds, utilities, gold.
Why not?
Seriously, I mean, it's the bug trade.
Bugs. You add silver to it.
Bugs, the bug nice, the bug trade. And it's been working.
And you hit something very important. It's on investor positioning. How they're positioning I'm giving you credit. It's how they're positioned within sectors, which is defensively, and how they're positioned in the aggregate. Institutional investor positioning in equities is 2 standard deviations below the norm. So I think what you're going to see is any of these pullbacks are going to be relatively shallow, and we've seen that. There is a mindset of buying the dips. You saw the employment data had a little sell-up, but it was slightly good in the data, and we had this massive rally the last 2 days of last week. And I just think that a lot of this negative news is really reflected in positioning already, so I don't know how hard we're going to get hit.
Especially in technology, which has come down, especially in some of the financials, some of the cyclical nature.
Correct.
Those stocks nobody owns those stocks at this point. I think I do, unfortunately, but I mean, it's not going to take much for that sector or those sectors to do actually well. I mean, I think the defense trade is so crowded and it's so expensive, and I understand
utilities. The U in the bugs trade 24 times forward earnings to some of these
Seems
names.
A little bit stretched.
They are regulated entities that are prevented by law from making over a certain amount of money, and they're trading at more than 20 times earnings on the aggregate. Next era, you name it, it's probably above 20 times forward.
Utilities, rates, and staples, they're all trading at those
the computers are buying them. It's the algos that are buying them and pushing them up because the economic data
the algo's going to sell?
that they should.
If you look at the consumer stocks, whether it's Hershey, Coke, Pepsi, Walmart, these are 25 times earnings, and their growth rate is nothing close to companies like Apple, Google, Facebook. And you can have problems with potential regulation, but these are not fast-growing companies, the staples. They might have dividends that are 2% plus, but at these multiples, it's a really hard buy to make at this level.
Brian, also, Stephanie mentioned D.R. Horton, which is
home builder.
Kudos. Great trade for her. I'm in Lennar because I have said all year that the lower these interest rates go, the more attractive this sector becomes. There's nothing on the horizon that dissuades me from thinking that we're going to see at least one more cut this year. And some people are saying multiple cuts already being priced in for 2020. So if you see interest rates dropping like that, the consumer's going to stay just fine. The market will be volatile to the points you made at the top of the show, but the consumer will be fine.
Okay. One quick before we get to Steve. All right. Agreed. But Lennar, the market seems to, the smart money already has seemed to have gone in. Lennar's up 52% this year.
Yep.
D.R. Horton up 53%.
But trading at 1.5 times book, the high end is 2 times book, maybe even 2.5 times book. So you have a diversified company, good management, good cash flow, buying back their own stock with low interest rates. Where else are you going to go? You don't have to worry about trade.
What's working is going to continue to work in that demographic.
It's a new Dr. Seuss
How about
book.
this
Horton hits a bid.
In the last in the last 3 months, Lennar is up 25%. The market over the same 3 months, the S&P 500 down 2%.
All right,
not a big drop, but
good
I'm just
discussion.
saying.
D.R. Horton, Lennar, some names out there as well. Kerry, thank you. All right, we're all just getting started on a macro level, but it's not just China and trade grabbing the headlines. The Federal Reserve, remember them? They're also a big factor. And Fed Chair Jerome Powell getting ready to speak in just over 2 hours. It comes with the IMF cutting its global growth outlook for this year and for next year. Let's bring in the aforementioned Stephen Leisman. Steve, what can we expect the Fed Chair to say 2 hours from now?
You know, the title of the speech is one that suggests he'll be talking about the economy, the outlook, and monetary policy.
What's the title?
It's monetary data dependence and monetary policy.
Okay, not why I'm cutting rates next month. That'd be a good title.
You could read it that way, Sully, if you wanted to. And some people might hear the speech and they may walk away with that interpretation. Others might walk away with an idea that they're not. I don't think that Powell at this point would be leaning too much against where the market's priced, which is 75% chance of a rate cut in October.
So you're seeing the Leisman meter that is going dovish for Powell tonight.
I think it's status quo, essentially, which is where the market is. I mean, I don't see him saying, look, we're in a really good place and monetary policy is sufficiently accommodative. I don't think he's going to say that. That kind of language would be the kind of language that would cause the market to think it's not going to happen. Where I think the market's right and where I think the Fed is this discussion and debate about what happens in December. Just a 41% or so probability of that fourth rate cut, which, by the way, if they did it, it would completely undo all the rate cuts of 2018. So if you feel like you've been whipsawed on monetary policies, because you pretty much have been. I think that debate is going to be more dependent on the data, more dependent on some of the outcome of the things you guys were talking about in the previous segment, which was trade, and the global growth outlook, which is the IMF.
And to my point, though, I mean, if you're the Fed, you know, you heard our discussion about how do you factor in investment decisions knowing that the trade war may never end. I mean, we can't just assume there's going to be an end. I would imagine this is an impossible job for the Fed because they have to... I know trade's on their mind, as you've reported many times, but what if it doesn't end? What if the tariffs stay on for another decade?
By the way, that's my operating idea. I don't think the president means to take these tariffs off. I don't think this is about IP. I think if you read the president's August economic speech before he was elected, now, of course, things change in that period of time, he wants to bring back manufacturing from some of the places it's run to.
Good luck.
Okay, you hold on to that comment for 1 second, okay? But let's play this out. If the idea is to bring back manufacturing from Asia, and you believe that tariffs are a way to do it, which we can debate a lot of that part.
We're operating under that assumption.
Can you possibly incentivize a person to build a factory in the United States based on a temporary tariff regime? It doesn't work. What would work is a permanent tariff regime. A persistent regime. That would be the one that, if it did work, it would have to work over time.
You know, by the way, his base would love that.
And I think the idea, I don't think they've said this, but if you read what Peter Navarro has written, if you read about the idea of the economy that President Trump and Peter Navarro want to have, it's less one in the service sector. It's less one that is more technology driven. It's less one that is sort of aftermarket post-production and more sort of in line with the iron and the steel. I will tell you critically, I suppose, when I read President Trump's speech in that August before he was elected. I said, this is a great plan for the U.S. economy in the 1950s. And they want to go back there. And look, whatever you think about that.
Yeah, because Germany and Japan had no manufacturing capability for 30 years.
Sure.
That's why the U.S. had a middle class.
Sure.
Because we decimated our enemies and we were the only global producer.
Anyway, I think that's it.
But I honestly think that that's what the former middle class, those that put him in office, really want, is a resurgence in the manufacturing activity in this country.
I think there's
whether it's possible or not, I don't know. The real question on the Fed for me, Steve, is are they ultimately behind the curve? And I don't think so. That's when they become relevant to the market discussion beyond trade, is if they get behind the curve, or if the markets perceive them to be behind the curve. I don't see that.
It's a bit of a tough situation for them. Imagine if they came forward and said, we are cutting rates now by 50 basis points because we believe that the president will impose more and bigger tariffs than he's going. They cannot act prospectively on tariffs. They have to wait until it happens, hits the economy. So they're always going to be behind the curve on the tariff thing because they don't want to be out there in front of it before the president makes policy.
It's called preventative medicine.
Well, no. Right? If you follow that through, you're saying they should say we're doing it because of the tariffs to come.
Okay, so I don't want to get into politics because it's just, you got to take a shower afterwards.
Wait, Brian, I disagree with you. That's all we talk about. It's everything that animates
tariffs are
the market.
politics. Fair enough.
It's everything.
Hold on. At what point does the Fed have to start thinking about the possibility of a change in the White House? I don't know what's going to happen, but we're either going to have 5 years of tariffs theoretically, or 1, depending on what happens in the election next year. If you've got a front-running Democratic candidate, and you don't know who that is yet, looks like Warren, but if they come out and say, I will remove the tariffs immediately, does the Fed start looking at...
She will.
No, I'm not saying she will. I'm saying...
They don't, Brian. I'll tell you, if they follow the prescription that they already have laid out, which is to address the impacts of policies that have been enacted, they do not have to consider what happens if there's a change in the White House or if the president were to remain in office. They don't have to consider that.
Trump can survive a 1.5% GDP economy?
No.
Got it.
I don't.
Okay. So, Steve, I have a question. It relates to the impact of tariffs. So if we talk about literally bringing manufacturing back here because there's no place else to manufacture, if you essentially say it's going to be too expensive to be bringing goods in from China or Vietnam or pick your country in Asia, and we're going to be manufacturing refrigerators, washers, dryers, cars, clothes, everything in the U.S. We have had an enormous benefit for the last 40 years of lower price, lower consumer goods because of manufacturing moving overseas. That's benefited a lot of people. You start to say, oh no, we really need to bring the jobs back here. But let's talk about the cost to make those products that those jobs are going to be applied toward. It's a double-edged sword. I don't really understand how the American consumer will understand that.
What are you, some kind of globalist?
Well, I guess I am. I mean,
She lives in Boston. What does that tell you?
Everything you need to know.
It's on Twitter dumping tea into the harbor last night.
She would only do that if Tom Brady basically...
Wow.
I will just say very quickly in response to that, it looks like at least some of the impulse of tariffs is disinflationary. And the disinflationary impulse comes from less economic growth.
Right.
And that tends to reduce prices. I think there is some... what you do is you do without. You don't necessarily pay more. There's some amount of this stuff that we buy only because it's cheap. That if, you might... Well, you probably fix garden hoses all the time, right, Brian? I mean, you probably...
But to your point,
you throw out the garden hose, you buy a new one.
Everything is disposable.
Right.
Even dishwasher.
You could get a little away from that.
The last 5 years, it's unbelievable.
If
everything
prices were to rise, you would substitute away or substitute towards a different product that were made. But the idea of bringing the manufacturing back, I don't know, because the problem you get is it won't move to the U.S., it will move from China to another Asian country.
The disinflationary effects of going offshore are yesterday's news. Today's news is the disinflationary effects of technology and price transparency and immediate price discovery. Yeah. I do not think it's offshoring anymore. I think that's the 2000s. Today it is the Uberification, the Airbnbification. It's not the Chinafication of the market anymore. And so the Fed has a unique scenario where we're growing without the same inflation impulse that we used to have. And that's an easier paradigm to operate in because they're not going to kill the recovery.
All right, good discussion, guys. Thank you, Steve Leisman. Appreciate that.
Always good.
Well, the bus has only just left the station on this show. Here's what's coming up on the rest of halftime.
A double upgrade from Mr. Softy. Shares of Microsoft up more than 30% this year. And Jeffries thinks it has more room to run. The desk debates it next. Plus, the Nigerian brothers are following the action in the options market. Stay tuned for John and Pete's latest trades based on unusual activity straight ahead. The halftime report is back in 2 minutes.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Vitality Health Insurance.
Oh, hi. Is it true if I join Vitality I get de facto 5-star rated cover, can speak to a GP 24/7, get rewarded for staying active with things like Starbucks coffee, get a little sausage dog to live with me, and you can beat my current premium by up to 10%?
Absolutely. Except one of those.
It's the dog, isn't it?
Yeah.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Minimum monthly premiums, terms and conditions apply.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's Liz Hernandez with your TuneIn Music News Update. Taylor Swift tells Rolling Stone magazine that living a quiet life still causes drama. She says, "I decided I needed to live a quiet life. I didn't realize I was inviting people to feel they had the right to sort of play my life like a video game." Meanwhile, the Daily Mail claims Ed Sheeran has donated 18 pairs of his old slippers to charity. Most of the Nike, Dolce & Gabbana, Converse, and Air Jordan slippers are expected to sell for as much as $250 a piece. For music from Taylor Swift and Ed Sheeran, search today's hits on TuneIn.
All right, it's time now for your call of the day. While Microsoft stock has more than doubled, the S&P 500's return this year, pretty good. Jeffries thinks there's still more than 15% upside from here. In fact, the analysts there double upgrading Microsoft to a buy all the way from underperform, basically a sell with a $160 price target. Pete Najarian, to be fair, it's a new analyst. So they've changed
exactly
their coverage with a new view.
Right.
I would imagine you agree with this Microsoft
view. The previous view was a $40 price target that sat there for many years and then started to move up with this sell rating on the stock. And that was concerning. And then all of a sudden now, obviously, we get a different type of look at this thing.
Maybe that's why there's a new analyst.
Absolutely. I mean, the price target was 93, and here we are trading at, what, 136 or 137, it says. So, yeah, I mean, it's amazing to me. This, first of all, is a company that not only has incredible growth, and we talk about that all the time, but how about some of the acquisitions that have also added to what they're doing right now? LinkedIn, for instance, you look at the revenue growth there. There's a lot of things going right for Microsoft, and I think that will continue because they have the right person. 5 years ago when they hired Satya Nadella, they knew exactly what they were getting. They were getting cloud, and they wanted coverage in the cloud. They wanted growth. They're getting all of that. They still got gaming. They still got all these other arms.
They got the Xbox, John. I also think they knew what they weren't. And under Steve Ballmer, no knock, he's a good guy, but they were trying to be everything. The Zune, all these things. Nadella focused. Nadella, they bought Nokia. Nadella focused them out here. I would imagine you like this call. They also like, by the way, in that space, Salesforce, Adobe, and Intuit.
Yeah, and why wouldn't you? I mean, Salesforce, because Benioff's one of the smartest guys in tech. As far as Adobe, also reoccurring revenue, same kind of model as Microsoft's operating under right now. And, I mean, I just can't say enough about the idea that the new analyst gets it. The old analyst didn't.
He's not
just
new,
as
though.
you say.
He's not new to the industry.
Not new to the
He's been in the
industry.
industry for a very long time. And he's actually
new to
quite
Jefferies.
New to Jefferies.
That's the whole thing.
With MiFID, there's a lot of analysts moving around.
Right. I mean, I think it's a perfect stock in this environment, right? It's very defensive, a little bit of dividend yield, buying back a lot of their stock. Right. They've got Azure, which is growing like a weed, and that's probably in the fourth or fifth inning in terms of cloud in general.
Yep.
So, I mean, they're in the right places. So I think the
they're
call
still
makes sense.
winning,
The
too.
only
They are
thing
winning.
is it's not cheap,
They're
but
just
I
doing
get
it.
the defensive
Listen, they're just doing it right up there in a mid-sized city in the Pacific Northwest. All right,
Look how fast they went over the top of Slack. Just real quick, that's another one. Somebody comes into the business, they go in the business with them, and they beat them right away.
Yeah, and they've done great. All right, by the way, in that same call, they downgraded Oracle to a hold from a buy. Well, options bulls betting on energy, really? And gold. John and Pete have new trades just for you coming up. And we are now just 1 month away from a very special halftime show in honor of Veterans Day, live from the Women's Memorial in Arlington, Virginia, Friday, November 8th. So if you're a veteran or part of a military family or just want to join us that day, email your name and your phone number to veterantickets@cnbc.com. The tickets, of course, are free. Halftime report back after this.
There's golf. Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Head to TradePoint to see the new kitchen ranges. The quality's gone up, while delivery times have gone down. With up to 6 ranges stocked in-store too. And the low prices, well, they're still low. Plus, they're even easier to install. For all you need, when you need it. Get to TradePoint or go to tradepoint.co.uk.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Hi, this is Brian Weber, host of NFL First and Goal, every Sunday, kicking off at 1 Eastern, only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
The Russell 2000 has dropped about 5% in the past 3 months. According to our data partners at Kensho, after similar losses, the bearish trend continues, with small caps slipping a month later, underperforming the S&P 500. For more, go to cnbc.com/Kensho.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. House Democrats say they plan to issue a subpoena for the U.S. ambassador to the European Union, Gordon Sondland. This after the Trump administration blocked his planned appearance before lawmakers as part of Congress's impeachment inquiry. NBA Commissioner Adam Silver says the league is not apologizing for Houston Rockets general manager Daryl Morey's since-deleted tweet showing support for anti-government protesters in Hong Kong. He spoke at a news conference in Tokyo.
Essentially, what I've said in that statement is the long-held values of the NBA are to support freedom of expression, and certainly freedom of expression by members of the NBA community. And in this case, Daryl Morey, as the general manager of the Houston Rockets, enjoys that right as one of our employees.
Piper Jaffray's Teen Insights survey shows YouTube has taken the top spot from Netflix for daily video consumption. It says YouTube now has 37% of the market, compared to 35% for Netflix. Facebook's decline among teens continues. It's down to just 31%. You are up to date, Brian. That's the news update. Back to you.
All right, Sue, thank you very much. Well, Marathon Petroleum has actually seen a bit of a bounce recently, with that stock gaining even more than 10% in a month. And guess what? Bullish options traders are betting on even more upside ahead. Pete and John have that unusual activity and more. Pete, you're up first on a company that some hedge funds have started to get involved with.
Yeah, the hedge funds, and that's a big part of why we're seeing it here. Obviously, we've seen the pullback in oil. I know you follow that very closely, but we've had 9 separate hits just in the last month in this stock alone, and they just continue to be right, from the stock trading at $46 all the way up to where it is right now, and at $60 a share, so a little bit higher than it was right now. The November 65 calls, about 5,000 of those were bought pretty aggressively. They're paying a little over $1 for these calls. I'm in this already. I'm in the stock and in the options. I feel like there must be something more, Brian, and we'll hear more about this story as time goes on, but we've seen buyers out in January. Now they've got a little bit closer out in November. My calls that I own are out in January. I also own the stock. I got one more for you as well. Take a look at GLD. Now, we've been talking about this one. This has hit 41 times since the end of May with buying, when the stock was trading around 120, all the way up higher. We trimmed almost everything. I still own some. So we also see some buying today. Where are they going? They're buying a lot more time than they were buying. This isn't a short-term trade like everything else, but this trade, they're actually going to the March 149s. You can see it. This was yesterday's volume. They bought about close to 6,000 of these calls. They bought it again today. They continue to buy there, and they're selling way upside calls. So this is something that tells me they're looking for this to make a nice move to the upside. We talked about a little bit about GLD, SLV, and some of that protection. This is probably more of that, what the people are looking for in terms of if markets are going down, maybe gold's got a little shot to go a little bit higher.
A hedge, not just a straight long. All right, John, what are you seeing in unusual activity?
All right, Brian, we've had several nice calls in this stock, because whoever the big paper is that steps in here has been very accurate. Now you've seen the stock pull back from, around this level, let's call it $40, pulls back down here to 29. I like getting back in here. Somebody came in today and started buying up calls. Which calls were they buying, Brian? With the stock right here at 28.77, they're buying the November 32 calls. I bought those calls. I'll probably be in them a full month, and I like the stock to make a recovery back into those mid-30s pretty quick. So like I say, if it does, and that happens really quick, I'll probably take off some as this thing's rallying.
All right, good stuff there. C Limited, SE, one of the hottest IPOs. Thanks, guys.
Yep, thank you, guys.
All right, up next, Apple. It's close to all-time highs, but with the trade war raging on, the economy may be slowing down. Are there risks to buying Apple at these levels? Plus, the favorite FANG on Wall Street right now and how our experts will trade it. That is next on Halftime.
How can the markets be efficient if we're surprised every quarter? So the fact that we're surprised means the information isn't in the market. So my favorite example of this year was on January 3rd, Tim Cook said they're selling less iPhones in China. On that day, $75 billion is wiped off the market cap of Apple. Now, $75 billion is larger than the market cap of most things you can invest in, and Apple is one of the most followed stocks. And clearly, every one of those phones that's sold uses social media, has contracts, uses email, is used as a telephone. So the data is in the world. The data is not in the market.
For more investment ideas from the biggest names in business, visit deliveringalpha.com.
Can you? 1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Right now, the future is being written by people like you. Creative thinkers, tech lovers, problem solvers. Are you going to stand by and watch? Well, show the world what you've got. Join others around the UK on an EY degree apprenticeship in digital and technology. And earn a salary working with exciting businesses while studying towards a degree. Don't let the future pass you by. Get involved. For more information and to apply, search EY Digital Apprentice.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raz, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Welcome back to the Halftime Report. Tech, it is getting trashed in today's sell-off. In fact, the tech software ETF, one of them, the IGV, on pace for its first down day in 4. So not terrible, but today you always wonder, is it going to be the start of something more? Plus, the semis are also getting hit hard. The ETF that tracks the sector on pace for its worst day since August 23rd. And that's not it. A big call on the FANG stocks from Bank of America saying that despite some headwinds out there, they do like Amazon the best. That is their favorite tech pick. Anybody disagree or strongly agree with this B of A call? Amazon's their favorite, Carrie.
I think Amazon's the favorite right now because it represents the consumer. People are buying the consumer and the strength of spending, and we're going into the Christmas season. That's the way to play it if you want to combine technology and the consumer. And
I agree with you. They are absolutely the belle of the ball in this case.
I disagree.
Oh,
Apple.
No.
Apple is
Does that mean you don't like Amazon, or you just like Apple over Amazon?
These guys make great points about Amazon, but everything they just said about Amazon also applies to Apple. I mean, Apple is a consumer stock. This is the play, and they're spending $1,000 when they go in there to do it. So I say that tells me a lot about the strength and the optimism of that consumer when they're buying that expensive.
And if you look at the fundamental story
iPhone
in this
11
release,
Pro.
the 11 seems to be something that everybody's excited about. They already said that they've gone out there and said to their suppliers, hey, we need to ramp this thing up. So on top of the fact that finally underneath 50% of their revenues, right? That finally, in terms of the hardware, we're talking about the phone itself. I think that's a positive, not a negative, Brian, because they are growing everything else at such a great pace and the margins are better. This just continues to fuel services and all the rest of it, the wearables and everything else. They're going into AI. They're going into AR. They are going into other categories that are going to be huge.
By the way, in this Bank of America call, if you're looking for some under-the-radar names, they have 2 small cap picks they love. IAC Interactive, owner of Match.com and everything else, and Wix.
Not that small.
Wix, the website. I know they're not. I know that's smaller.
Small number of letters.
Carrie, every stock but 3 is smaller than Amazon, so it's fair to say. It's like, hey, there's Manute Bol. Oh, you're shorter than him, Will Chamberlain. I get it, but he's still pretty tall.
Shaq's still tall.
Exactly, but short compared to Manute Bol. Remember that. All right.
I mean, I own Amazon and Apple. Apple is actually my largest position, and I've been actually trimming back on Facebook. Even though I love it, I'm still overweighted, but it's a little
The regulatory headline.
it's just too hard. It's in the news. It's like Boeing. And I own Boeing too. It's like every day it's in the news and it's hard. So, so I like Apple. We were talking about wearables. We were talking about services. We weren't talking about hardware. And now all of a sudden, to your point, we're talking about hardware and better data points. And at 17 times, it's more palatable than Amazon, which I also own, but it's trading at 50 times. And they have to get everything right. So
I find it hard to square, across the board, on this show, on this network, on my show in the morning. We talk about, is the economy slowing down? But, $1,100 phones are going to sell just fine. It's hard to square the two. Maybe because Apple. Apple is now a financing company.
But they're also focusing on the lower priced phones too, and that's why numbers aren't actually going up from these production increases, because the margins are going to probably get hit. But people are still buying the product because that's what people want.
Let's remember,
they want that product.
It's $1,000 phone, but what are computers costing? I mean, Warren Buffett himself talks about it all the time. Why is he in Apple? Because of that exact fact. People are willing to pay $1,000 for this.
Well, or $28 a month.
Or $28 a month, and that's even better.
And that's they're a financing business.
Absolutely, they are.
The Bank of Apple.
Yep.
All right, next up, The Desk, answering your questions. To reach us, you can go to cnbc.com/halftime. You can tweet us. The Halftime Report is back in 2 minutes.
What gives me confidence?
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, tune in on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throw it. He's got it on stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long free on TuneIn.
It's Liz Hernandez with your TuneIn Music News Update. Taylor Swift tells Rolling Stone magazine that living a quiet life still causes drama. She says, I decided I needed to live a quiet life. I didn't realize I was inviting people to feel they had the right to sort of play my life like a video game. Meanwhile, the Daily Mail claims Ed Sheeran has donated 18 pairs of his old slippers to charity. Most of the Nike, Dolce & Gabbana, Converse, and Air Jordan slippers are expected to sell for as much as $250 a piece. For music from Taylor Swift and Ed Sheeran, search today's hits on TuneIn.
Hey, a little bit of a comeback for the market. Dow down just 150 points. Well off its lows this session. There you go. All right. I know you pointed, and you were mad. I said, what are you talking about, Gary? What? And you're like, the market's coming back. And I was like, oh, got it. Thank you. The traders are now answering your questions. First up for Rob Sechan from Alina in New York. What do you think about the EWZ? That is the Brazil ETF.
Okay, we're underweight EM broadly for obvious reasons. Trade data, weak economic data, and you're seeing valuations at the high end of the recent range. But we do like Brazil within EM. That said, with the indexification of what's happened and how everybody invests in these, I think it's tough to get EM exposure in a very idiosyncratic way when you have a macro headwind. In addition, when you look at Brazil, financials represents 37% of their index. Energy, which is another cyclical component, is another 13%. So 50% of that is really cyclical. So I think you can take a wait and see approach and catch it when you start to see some improvement on the trade front.
Okay. Next up is Dottie in Minnesota. Should I buy Cisco Systems? Stephanie, you own it?
I think you should. I actually own it, and it's lagged year to date. It's only up 8%. Trades at 14 times, gives you almost a 3% dividend yield. New product cycle story, margin upside, fabulous management team.
There you go, Dottie. All right, Ed in Virginia says to Carrie, buy, sell, or hold PayPal.
So, Ed, I like PayPal here. We've owned it. I know the stock's come down from 120 to 100, but the multiple has come down from 34 to 29 times. It's got a long runway for growth. Remember, 85% of global payments are still done in cash or check. So, yes, we like it right here.
Okay. John, this one is for you. It is from William in Nevada. Has U.S. Steel, the X, finally bottomed?
X is very close probably to bottom, but there are zero buys on this one. There are mostly holds and sells on the name. Moody's downgraded U.S. economic or industrial output, and that was one of the reasons that people just hit the sell button. I think you're really close to a bottom here, but no, I'm not buying it right now.
All right, close but not quite there. And finally, from Gina in D.C., what are the prospects for the regional banks? Are they a sell here? You also had Citigroup downgrading Citizens, Regions, and U.S. Bancorp to sell.
Yep, and I saw that, but I also like the fact that I think Warren Buffett, this is one of his favorite names. It's one of mine as well. And Wells Fargo, those are names that now that we've got the management settled out of Wells Fargo, I think that one's still a buy. And I look at this name, they're buying back stock.